you've got a lot of real estate rental properties and overall you're not really paying too much in taxes because you have depreciation, mortgage interest, and all that stuff. And maybe you are paying tax, or maybe you have taxable income and you're a real estate professional. Why would anyone want to open up a management company and charge a management fee for each property? It all funnels to a management company. It probably could be a sole prop, Schedule C, an LLC, single member, whatever you want to call it. Maybe you can convert it to an S corp. So you pick up all that income there, and then you deduct things like your home office, maybe you do a salary for yourself, you do retirement planning, contributions, health insurance, hire the kids strategy, Augusta rule, event rentals. Okay, so, but after you take all those deductions, do you still have income? Maybe, probably. And that income, if it's not an S corp, is subject to self-employment tax. So now you did all this stuff and now you're paying self-employment tax. So what did you do? Did you hurt yourself? Did you help yourself? And I'll explain it like with very simple. So when you look at your rental properties, you have your rental income and then your rental expenses related to that specific rental property. So when you try to say, hey, well, I pay $30,000 in health insurance and you want to get that health insurance deduction, can you sprinkle that throughout all your rental properties? And the answer is no, because what does health insurance have anything to do with the rental income of that property? So that looks silly. So right there, your $30,000 health insurance is a deduction if you have earned income in a trade or business, not a real estate business. So boom, you can do that. Can you hire your kids and sprinkle the amount that they work per property? Maybe, I guess. To me, it just sounds crazy. It's just an administrative nightmare. And does it smell right? Like, okay, so you had 10 properties and your kids specifically work 2 hours on each property. How are you going to prove that if you get audited? So that just doesn't sound like a great idea. You want to do an event rental for your business empire. You can't do that strategy, the Augusta rule, because it doesn't make sense. Auto deductions. So you want to try to take your auto deductions for each property. You have 25 properties. And what are you going to do? Track hours specifically used for each property, which you're supposed to do anyway. You're supposed to track your miles and your auto logs. So that also doesn't really seem to make too much sense if you start taking $30,000 in total of auto deductions and you're going to sprinkle it through your 25 properties. I don't even know if you're allowed to do that. I mean, is it necessary? What are you doing? Are you an employee? Are you a contractor? You're just a business owner, so you're just reimbursing yourself. Are you paying from the rental income, the expenses? So I don't know. That doesn't sound like a great idea. So also you want to put that on in a management company. It's much easier. It's more understandable that you're managing a bunch of properties. So you have all these expenses, your home office, you hire the kids, even subcontractors that you kind of have that manage the properties evenly throughout the year. So it's a very organized thing, but there's also strategies that you can now take other deductions that you otherwise, it wouldn't look or smell good to sprinkle that in from each property. Just how you can do that, tracking it, and maybe that's not really an ordinary necessary expense for a rental property. The other thing is, a lot of times you want to get funding, or you want to get loans, or you want to get credit. If you don't have a business to show, it's not good. If you want to have Social Security benefits when you grow up, that's also not good because you don't pay Social Security tax on rental properties. So you want to start accumulating that. That's sort of like an investment idea for when you want to pull Social Security benefits. Putting money into retirement. You can't put money into retirement unless you have earned income, active earned income. So for those who want to have a nest egg of a few $1 million in their portfolio, investing in other things other than real estate, or maybe even real estate, but through a self-directed IRA, you don't have that. So you can't save taxes with deferral of retirement contributions. So that's another thing that you want to do. And there's just a whole list of things. Another thing is, a lot of times there's like a legal liability thing that you want to do. And you'll see that people have this LLC, the management company, and collects the rent from all the properties. And this way, all the tenants don't really know who owns the property. You have like anonymity. You're anonymous. So if something happens, they try to sue the managing company. The managing company doesn't have much assets. So it's protecting you from a lot of issues legally. And that's another reason to have a management company. Some people hire management companies to do all the rental and the repairs. And so there's a lot of things to think about. Have a great day.